Hello and welcome to our viewers on cruxinvestor.com and also to our listeners on Cruxcast, our new podcast series. We're joined today by Serafino Iacono. He's the chairman of Gran Colombia Gold. Hello, how are you?
Very well, thank you. Thank you for inviting us. Good morning. Give you a little bit overview of the company. Gran Colombia is the largest producer of gold in Colombia. We produce 250,000 ounces of gold at the end of this year. It's a company that was founded in 2009 by the combination of a company called Medora Resources that had the Marmato project and Gran Colombia Gold that had the Segovia project. It's a company that has gone through, since the foundation of this company, has gone through some incredible growth. It's a company that started with 65,000 ounces of gold. Through the years, we have reorganized the company. We invested in total of about $400 million in the combined company. They have very large reserves basis, and as we stand, the company has probably one of the best grades in the world. I think it's top 3 on grade, 17 grams per ton, and a very low cost of production, which is $540 an ounce.
Right, fantastic. Thanks for that summary. So, essentially, there are 2 projects that you've got. One which is Segovia. Now that's the one with the high grades at the
Correct.
moment, and obviously producing somewhere in the region of 193,000 ounces. So that's a significant producer. You've also got Marmato.
Correct.
So tell me about that. That's a bit earlier in the process.
Segovia is very much developed. It's one of we operate 3 of 23 mines in a concession that is truly a private property in Colombia. A rarity. We own the mineral rights and the land, so we don't pay any royalties in the property. It's not mature, but it's fairly mature, much more mature than Marmato. As you said, we produce over 190,000 ounces at a very low cost. Marmato is our next project. Marmato is a project that started actually before Segovia. We started by developing a low-grade open pit mine in 2011. Unfortunately, with the prices of gold going down, the project became very expensive to build. It was over $1 billion. So we changed the design of the mine by going underground and by developing the underground part. Today, we have a project that is in the development stage. We produce 30,000 ounces there. Now we're going to go into an expansion phase. The expansion phase is going to be to take the production to 180,000 ounces.
Right, okay. So I want to talk quickly about your board, if we may, because it kind of leads on to the next area I want to talk about, which is how you've structured the financing around this one, because you've got some very interesting structures in there and I'd love to talk about. So looking at the directors, it seems to be very legal and financial focused. The management team is very technical. I mean, how does that work? How do you work with that?
The way we like to arrange our board, we're mostly financial, and that's where we come from, but we come with an experience of almost 35 years in the mining industry, so we understand. And
mining. Outside as well, I understand. Yeah.
Yes.
Yeah. We should talk about it in another conversation.
Well,
but
sure.
Okay.
So our board, it's usually a board that gives strength on the financial side, that gives strength on the legal side, and mostly on the compliance side.
And why have you done that? Is it because Colombia is difficult to operate in, or is it just the
Colombia is a very challenging place, like all South American places. We, as a management, choose to live in the country. So we live, myself and most of my board, with the exception of 3 of the board members, or 2 of the board members that live in Canada and the US. The rest all live in South America, and they all live in Colombia. So we're very hands-on management team and board. One of our directors is an ex-minister of mines, so he knows
Mr. Martinez.
Mr. Martinez.
Yes.
My partner and co-founder of this company, Miguel de la Campa, has been in Latin America involved in natural resources for 40 years, and so have I. So for us, the separation, the management team, it's very important that has the know-how and has the know-who. That's the most important thing
That's a
to
great
have
phrase.
in Latin America.
The know-who.
The know-who is just as important.
I think so. Okay. But tell me a little bit about them, because I see a lot of years of experience here.
Well, Lombardo Paredes is the CEO of the company on the management side. Lombardo actually comes from he's an engineer, is a mechanical engineer, but he was the head of the largest oil refinery in Venezuela. Managed 7 million barrels of oil a day in refineries all over the world. So although his experience also comes in mining, because in Venezuela, when he was in Venezuela, they dealt with oil. Oil and mining was very much related with iron ore and things, so he understands the business. He is really the driving force in the company to taking the company into the development that we've had in the last 4 years. The CFO is a guy with 25 years experience, worked for major mining companies. Mike Davis, financial guys that understands what needs to be done, that has great controls.
Right.
And
how long has he been with you?
He's been with us for 20 years almost.
Okay, wow. Okay, like a lot of people who have been
Like
with you a
all the
long
people,
time.
our local people, I would say the youngest is Jose Ignacio Noero, has 12 years working for us.
Right.
He's
A youngster.
baby.
Yeah. I want to talk about Mike Davis and your experience, because if I look at some of the structures you mentioned in your PowerPoint, it's pretty interesting. It's unconventional, but it's allowed you to get into production and start throwing off cash, which you're doing, and you're now in the process of paying down debt, etc. Explain how you've gone about your thinking. Why have you structured things this way?
Well, we went through the good times of when mining and was very easy to raise money. There were a lot of funds in the world and everything. In the last 6 years, it's become very challenging, very difficult to develop projects. Through ourselves, our management team, Mike Davis especially, that is fantastic on the financial side, we had to reinvent ourselves in ways of creating liquidity in the company to build the projects, but at the same time maintain the structure of the company of not getting super diluted.
Right, and that's tough, because a lot of people are just happy to survive when it gets tough. You've actually been able to build this out and get into production, significant production. You're a mid-tier producer now.
Absolutely, and on our way to become a large producer, because with the Marmato development, which is our latest financing that we're going to be doing, we are going to go to 400,000 ounces.
Wow.
So then it becomes a completely different company. How do we do it? We started looking at the possibilities of doing things. These days, when you go into streaming, the streaming is a very expensive way to finance yourself. It's dilutive to the investors. It's very punitive to the investors. And our group, my partner, myself, are probably the largest shareholders in this company. We are very much aligned with the rest of the shareholders. So for us, it's important that we don't do steps that prejudice the investors. So we started looking at what's the best way to finance this thing. We have a very solid company. I mean, if you look at Gran Colombia, we put out our financials yesterday. They were fantastic. We've been growing for the last 4 years, every quarter, 15 to 20%.
Which is great. That's PE type returns. Exactly. That's great. Okay.
So the company has taken the cost of production when we started taking the mine over of $1,100 an ounce. We're down to $540.
Fantastic.
So,
1,100 down to 500.
So when we've been very successful in establishing parameters, and that's been through the financial thing. So the next step was, How do we finance our project and how we finance ourselves?
Right.
The most important thing that we've done, we as investors and as founders of this company, put our money where our mouth is. So every time
What does that mean? How much money?
Well, the 20% of the debt that was $150 million debt was management.
Wow.
It still is management.
Fantastic.
So management believes in his company and his assets. We had to find ways, since the banks don't lend money, since the streaming are very expensive and everything, we started thinking of what's the best way for us to finance. We actually were the first one in Canada that created this kind of bond that we did.
Tell me about that. I've marked them on here. I want to know.
It's a fantastic piece of paper. Yeah. I mean, we own it and we love it. We do it in such a way that it's beneficial. Instead of giving the money to a bank or giving the money to a streaming, we give it to our investors because most of our shareholders are the guys that own the bonds.
So what are the terms on that?
The terms of the bond of the bond that we have, the only bond that we have, it's an 8.5% coupon.
Nice.
We cover the downside, which is $12.50 gold. So we guarantee that you will get $12.50 gold.
Okay.
You get all the upside on the amount of money that was lent to us.
Right.
So in the case of this case, when we started the bond was $100 million. We're down to $68 million in the first year. We already paid a very large.
So what's the term? When's this due to be paid?
The terms, it's going to be paid. The terms is 2024, but we're going to finish paying it in 2023.
Early redemption, no penalties.
No penalties. No, because it's at the end of 2023. Okay. But the paper is a fantastic paper because it gives you the coupon, steady coupon. It gets paid. Interest get paid on a monthly basis, so it keeps a discipline. And the principal gets paid on a quarterly basis. Plus, on the quarterly basis, you get a kicker if it's above $12.50.
Wow.
So it's a paper that gives you 11% return. Yep. Every month, we set an amount of gold aside in Scotia Bank, and at the end of every 3 months, we cash in the gold. We pay the principal, and so on.
Right, so you've got some gold set against the balance.
It's guaranteed.
Fine, and that's physical gold.
Physical
set against
gold.
Okay, interesting. And so when you say your investors, are these institutional guys? There's a lot of money, so it's going to be mainly institutional guys.
Yeah, it's mostly institutional guys.
Right. So dividend paying, yield paying bond in this market, that must have taken no time. Or did people struggle with the concept?
No, they didn't. At first, they were looking at this. It was a very nice piece of paper. Yeah. At the beginning, was what's the catch? Yeah. The catch was that if we put together a financing from a bank, or we put a financing from a streamer, we would have paid probably a lot more and gave up a lot more on the project. By the way, this came with a warrant attached.
Yeah,
that gives us $35 million additional dollars if it gets exercised. When we did the warrants at $2.20, today they're in the money by $1.60. Right, so that's an additional kicker that you have in there.
So that's happening.
But we gave it to our. The bond was placed in the hands of large institutional investors. They're very happy. And with this kind of system, now we created a situation that we are going to be financing. The next step is to finance the Marmato mine, and the Marmato mine is going to be financed in the same category of bond. Okay. And the same shareholders and the same bondholders are very happy to participate into this thing again because they see that it's a very profitable and very secure.
It's definitely profitable. I guess the question is, do you need to do it that way? Can you go conventional? What are you going to do with the money to develop?
Well, the money of Marmato is going to go for developing literally the expansion of the mine. We're going to take the mine from 30 to 180,000 ounces. So it's a construction of a plant. We're going to be mining the upper portion of Marmato conventional, and we're going to go underground in a sub-level stoping type, very large, 4.5 gram material to be mined.
Yeah, I mean, we can talk about that in a bit. I just want to stay on the finances of kind. So the conventional would be a debt type product. Yeah.
Correct.
But with a lot of security required, probably.
Restraints, security,
And it takes time to do.
hedging, all sorts of things.
So this note, or replication of this note, could be a much quicker way to expedite getting that money.
This note,
With people you've already made happy.
correct,
Huh? Right. Okay.
correct. So, and
Okay.
management will be a participant in that note also. So that gives a confidence to investors that management believes in his own company.
With a note like that, you can go and borrow money. I think 8%. Huh?
A lot of people, I think a lot of people, especially the Europeans, funny enough, I know that there is European funds that they can borrow at 1%, half a percent.
I know.
So they hedge and they bought
For
this
sure,
thing.
for
It's
sure.
a fantastic paper.
Call me. Right. Right. There's a couple of other things on here. So we'll get into detail about the two projects in a second, okay? But you've also got some blue sky potential here. You bothered to put it in the presentation. It means that you're thinking of doing something with that. So what is the thinking around those? Is it a JV? Is it a not develop it, explore it a little bit more, work out what you've got, sell it? What do you think?
We have 3 projects in the pipeline as a company that we have to grow. Once we have Marmato going, we have to think what's next. One of the projects is very well advanced, but it's in the hands of a major. It's
Right.
IronGold has the Sancudo project.
Okay.
They have 2 more years of exploration. They're spending $10 million right now in drilling. It's a beautiful project, very much like Segovia, high-grade gold, lots of silver, probably more silver than gold, but about 15, 16 grams per ton.
Really? Okay. Well, Steve Letwin's here next Thursday. I'll ask him. Huh?
Well, you ask him.
Sounds like a good project.
It would be nice to know what
15,
they're
16,
doing.
huh? That's good.
But it's a very, very good project.
Right.
It is actually the oldest mine in Colombia. It's the mine that financed the independence of Colombia.
Wow.
There used to be a currency.
Wow.
They used to make
That was
their
gold,
own currency
off of gold.
off
Wow.
of the gold, and they used to be listed in the London Stock Exchange in the 1800s.
So did many people.
So it's a very historical mine. It's fantastic.
That's a great story.
That's the mine, but it's in the hands of somebody. The other thing that we did, we wanted to have a little bit of diversification.
Yeah.
We wanted to go in Venezuela. Well, Venezuela, we've been there.
Yeah.
Gran Colombia owned before the government confiscated or nationalized all mines. We have a claim against the government. We're hoping that the new government comes in,
Right.
which we believe that they will eventually, and get rid of these people. I
Do
don't want to go into
you have a
politics.
don't get it. Well, a little bit. Let's do a little bit. So we see a picture that is painted by the press, North American press, UK press, of Venezuela being in a state of disorganization, chaos, and obviously new government looking to come in when they finally make that decision. For you as South Americans, is the picture clearer or?
It's a lot more clearer than people. I mean, it's still very challenging, but a
Right.
solution has to come in because the country has gone in a spiral that
Right.
that has no bottom. Eventually, there will be an opening and an agreement. We, as a company, have an investment of $110 million in a project that is it's called Lo Increíble A and B. It was part of our assets. We were ready to build a facility in a mine. It's got 4 million ounces of gold in place, open pitable. The reason that it's still intact because it's low grade, so we're talking
Right.
about 2.5 grams. Legal miners don't go mine those kind of grades. So we believe that it's an asset that will be easy to recover. That's why we announced that we were going to do a spin-off of our company of Gran Colombia, financed partially by Gran Colombia and other investors.
Right.
And that's going to be done in the next 60 days.
Right.
We're going to put our asset over there, waiting for a change or waiting for us to have an opportunity. It's a very, very inexpensive project. When we left it in 2012, that the government started talking about nationalization, this project was ready to work on It was $250 an ounce cost of production, all in sustainable.
All in
cost.
sustainable, yeah.
So
Yeah.
it's going to be a very profitable project, but we'll see.
Okay.
We'll see there.
Interesting. So let's come back to what you've got today. Just want to talk about some of the numbers, but around the company. So you've very few shares out, very tightly held.
Correct.
Yeah. So management is, how much is management got?
Management is somewhere around 19 to 20%. Depends if you look at the warrants also. 22 probably with the warrants.
Okay, fully diluted, right? Okay.
Yeah.
And I guess that a lot of it's sitting in institutional, just the way that you structure this.
I would say the rest, outside of us, probably another 50% in institution, and the rest retail.
Okay, so meaningful retail. Because the retail component is obviously what kind of tends to move these things in terms of the liquidity.
Yes, and the problem is that when we actually were a lot tighter than that. We had 21 million shares about a year and a half ago.
Okay, but you...
we issued, what we did, we got rid of some of the debt of a silver note, and we converted it. Most of it, a lot of it was our management and the same institutional investors. We felt that at the time the stock at $2.20, it was a good idea to convert and create some liquidity in the stock because it has zero liquidity. Unfortunately, it backfired on us. Everybody converted. The stock went to 350 and then went to 450, and it's now in the 360 range.
Yeah.
And nobody wants to sell.
Yeah, that's the
So
thing.
we're back to the same, but we're very happy with what we have.
Yeah, I mean, you're throwing off cash and you're paying down debt, which is great.
Well, the company is putting out a lot of cash. The company, we're sitting right now, end of July, we're going to be sitting with $50 million US in cash. We already paid $15 million in taxes, so we have no taxes until next year.
Okay, so I mean, talk to me about that. So you've got till 2023, but it looks like you're going to pay in terms of the debt, current note, but you're going to pay that down probably quicker than that. You've got $50 million. Is that all going towards paying down the debt, or is there going to be any dividends, any cash buybacks
for the next few
share buybacks?
Yeah.
Sorry.
No, for the next year or so, I'm not a big fan of shares buyback. Share buyback has to be done at the right time. You buy shares when you are in a position that you say, all right, our excess cash is so much that we might as well. But if I take liquidity out of the stock, it gets even worse. It's going to be a much more liquid stock.
That's true. That's a good point.
So what are we going to do with the cash? The cash is going to stay in the bank as a security. You never know what happens with prices of gold and with commodities. So we're very comfortable building up a good cash position.
So you've got physical gold secured.
Correct.
You've got cash. So you've got lots of options.
We got lots of options. The other thing is we only use to repay, we own $69 million as of last month.
Right.
By July we're going to be down to almost 59, I believe that it's going to be.
Right.
The $59 million that it's owned only represents 7% of our production a year to repay that.
So less than the 10 in here, right?
So
Okay, so
it's insignificant.
Yeah.
So we rather go to the process of repaying that debt. The new bond that we're planning to do is going to be done strictly not on the corporate level. It's going to be done on the project level. So
okay. So to that point, with this bond taken up predominantly by institutions last time, we just talked about liquidity as a thing which is important for companies of your size, right? So is some of that bond going to be opened up to the retail market?
Yes, it would have to be a very specialized retail market, but yes, we would.
Okay.
But unfortunately, with some of these bonds, because it becomes complicated, especially when you go into a monthly interest payments and things like that, you want to limit to maybe $200,000-300,000 minimum investment, and that's what makes it difficult sometimes for the retail public to put in, because even the exchange puts a limit.
Yeah, for sure. Well, whether or not it's through the bond or whether it's through another mechanism to allow retail to get hold of more shares.
Correct. But you know what's interesting? After we issued, our bond is publicly listed. Retail has come into the bond and bought in small amount.
Okay.
Initially, you have to go and buy a certain amount. I think it's a 200,000 minimum that the exchange gives you.
Right.
But after that, once it's listed, it becomes an instrument. I know people that have bought 20,000, 30,000 of the bond, 10,000.
Your balance sheet. I mean, some of these things you've touched upon here in terms of the pay down of the debt. Your EBITDA from 2015 to today is literally that's a nice chart.
It's a fantastic little chart.
Yeah,
we're very happy with it.
Right.
What we're not happy is with the price of the stock.
Just don't tell me you're undervalued.
No,
everyone tells me
everybody says that.
But tell me, okay, you've had this kind of very fast, rapid ascension to where you are today in the EBITDA. What's next? What builds it up? I know you've got to develop the second asset, but is there more M&A planned, or is it a case of focus on these other exploration assets that you've got? How do you keep that projection?
Yeah, well, obviously the Marmato project is going to be significant because we just doubled our production. We already started the path of the M&A. We're looking at new areas in Colombia. There is the...
So you're comfortable in Colombia?
We're very comfortable.
And you're able to find good assets? You're able to assess good assets?
There's still very big amount of assets to be discovered there. But as part of our plan, obviously the next step is we already started with Sand Spring by taking a 19% position in Sand Spring. We believe it's a good jurisdiction.
That's a non-operational position, right?
It's non-operational, but we are giving some directions to management on how to proceed to build it through the experience of our management team.
And I assume that's the same with the IAM Gold situation, potentially?
IAM Gold, we probably will end up with about a 40% of the carry position into the company.
And they would operate?
And they would operate.
So is this the picture you're building? Is this the way forward in terms of your M&A? You bring in joint venture operating partners? Or is it...
In these two cases, it would be that, but we are opening ourselves to look at operations, to go and expand our operation, possibly Venezuela, possibly other South America. Our focus is always going to be in South America because that's where we operate, we know best.
Right, okay. So anyone wanting to understand the finances a bit, page 7 of the current presentation.
You're not going to find us in Africa, that I can tell you.
Okay. We use a phrase over here, say you stick to your knitting. You stick with what you know. Okay, exactly. So which is great. Okay, let's continue talking about some of the results here. I'm looking at page 9 of the presentation. In terms of your production, you're saying you're going to potentially to go from 225 up to 400 a year by the end of 2023. Okay, so that's with the kind of ASIC which you're looking at, that should be generating a lot of cash. So what's the end game here? Is this just a cash cow? We're going to keep running it? Or do we sell it?
At that point, that's where the decision's got to come in. One decision that we made is we were looking at one point for strategic investors, strategic partners to grow. People came to look at us to see because they were very intrigued with our growth and everything. Our decision now is instead of being acquired, if somebody comes, we're a publicly held company. Somebody gives us the right offer that it's good for our investors. We're there to see it, and if it makes sense.
Yeah.
We're not here because we need a job. We're here because we want to make money. So if that happens, but right now the strategy that we've taken in the next few years, it's going to be growth and eventually acquisition of other properties, and we are very much considering at one point when we feel comfortable the next few years a dividend payment, because this is going to be putting a lot of money out.
Right. You use a phrase in your presentation, just going to finish off using a phrase, so stay disciplined. Now, you're a businessman with lots of interests outside of mining. So how are you going to maintain discipline for this company?
The discipline comes from the management team. That's why my partner and I choose always to be in the chairman position. And although we are executive, we look at the big picture. We bring good management, strong management that have the capability of executing. And when we see that the execution gets a little bit wild, we have the strength and we have the position in the company to come back and bring everybody to earth.
And move quickly.
And move very quickly.
Okay.
That's what we do.
Hands-on management. Well, I've enjoyed hearing that story. It's the first time I've heard this. You've done exceptional work in the last few years to bring it up to where it is today. Look forward to hearing more about it soon. So next time you're through London, please come and see us.
Thank you very much.
Thank you very much
Pleasure,
indeed. Thank you very much for watching our video. We do aim to give you informed and intelligent information with which to make your investment decisions. So if you liked what you just saw, please give us a thumbs up. And if you want to see more insightful, in-depth, honest and unbiased interviews, then please click the subscribe button. So thanks again for watching, and we look forward to seeing you again soon.